Hey everybody, good afternoon. Sami here with the Strategic Swing Trader. I hope everybody's doing well, having a nice day. Just wanted to give you some follow-up commentary um, to yesterday's. I did a video yesterday on whether a discussion on the market, whether it topped out or not. And today I'd like to offer have a follow-up discussion. We did have a follow-through to the wide range red bar, which is bearish. Um, we broke under support, but that we didn't break under major support. Major support on the daily chart is the pivot that makes new highs, right? So this pivot right here at 178, 178, oh something, 178.12, I think, is where we is the major support because we made new highs on the daily chart of the Qs. These pivots or this pivot didn't make a new high, so that's not major support. Even though we broke under it, it's not a big deal. Let me just open this chart up so you can see better. So we haven't broken under support, but even if you do break under support, here it is, 178.12. You need to break under it on a closing basis. So we're not yet in a we haven't broken the uptrend at all. I've been saying in the black room that if you were to draw a kind of a thick line across the board from July through today, 3 months ago, I mean, you would see that we really haven't gone anywhere. Yes, we are in a larger uptrend. If we zoom out, we are definitely in a larger uptrend. But the last several months, we haven't gone anywhere at all. So we're more sideways than anything. With these two big, huge red bars, it's going to challenge the weekly uptrend. Actually, it's not challenging the weekly uptrend at all at the moment. But here's what we can watch for. If the market is unable to bounce back up, or even if it does, if it bounces, then we get a pivot, in which case this becomes the all significant level under which we cannot break. And if we do break, then we break the weekly uptrend. That's number one. Number two is what happens if we don't actually bounce? What if we just go sideways right here? Then what's going to happen is that 20 MA on the weekly chart is going to start to curl and push prices lower, and you get transition C. This is what's known as what we call transition C in the market, right? And that'll be a really bearish breakdown in the market. That's months to come, probably from now, weeks at least. For now, what we should look for is the reaction. Okay, we got the big red bar. Today is the end of the week, last day of the week. So we did get the big red bar. What kind of follow through or lack of follow through will we be getting? Because that is the most important thing, is whether we follow through on that red bar or not. If we don't follow through, and let's just say we go back up and negate it, then you know where the market is going, right? It's higher, higher, higher. If we can't bounce back up and we base, then we discussed what will set up, which will be a transition C breakdown. Or if for some reason we continue lower, then okay, you'll have missed the top, let's just say, unless you're in it, you're positioned correctly. And then you can look to do the next sell setup off of the declining 20 MA. Does that make sense? So those are the, I don't react to the market. I let it do its thing, and then I react, but I always have if scenarios in my mind. If this happens, this is what I'm going to do. If that happens, this is what I'll do. Does that make sense? You always want to be proactive. I showed you yesterday that I was positioned already correctly for the market, whether it moved lower or higher. And actually, for those that didn't watch yesterday's video, I think it was kind of a long video. What was yesterday? It was 10.4. So here's 10.4. That's yesterday. $4,200. That's pretty good. Today, not 42, but the day is not over. That's 2,000. So, and the market just in 2 days. So that's pretty good. I like that. What made the money mostly today, even though it was actually kind of a small position that I took yesterday, I called this trade for the strategic swing traders as a short. I mean, take a look at it. Let me just back up and show you the market one more time. Market is at all-time highs, right? Was 2 days ago at all-time highs. And then what's the NWL doing? At all-time lows. See it? So I mean, there's nothing to do but to short it, whether the market goes higher or not. It's a short. So as soon as it showed some weakness, and yesterday I sent out an alert to the strategic swing traders, and today it paid off. And then the other thing that is actually the second best position is a long, AKRX. Now the AKRX is independent of the market completely. It had a 50% gap down. That doesn't care about the market. This looks higher on the hourly chart. It's a fade. So if it goes back up, it'll be nice. And then also Jern is the same. If you want to participate in the Jern is a bit weaker. We also saw it already bounced a bit on the day of the gap, and so it came back in, so that created resistance. When you negate a green bar, so here's a green bar and got negated, it means the ones that bought it up here are now trapped. On the way up, they're going to look to sell, which will create a breakout failure. So the Jern I don't like as much. I like the AKRX more. We'll see. But I'm in this, and that's my second best trade today, and it's a long. But again, it does most of the trades that I try and do are are independent of the market. So regardless of what the market does, I'm gonna benefit. I will benefit from the volatility, whether it's volatility to the downside or upside, almost doesn't matter. All right, everybody, just wanted to kind of provide you with a market update. And we talked, just to recap, we talked about how this sell-off was bearish, but we have not yet broken the uptrend on the daily chart. We said that in order to break the uptrend, you need to break the major pivot, the major support. Major support on any chart, not just the market, is the pivot that makes a new high, that takes out the prior high. So that becomes major support. If you have a pivot that's a pivot, but that hasn't taken out the prior high, that's not major support yet, right? So major support, we haven't broken major support, and then we said, okay, on the weekly we have two red bars in a row. Let's wait for, on the daily, let's wait for to see what kind of a reaction we get off the rising 20 on the weekly chart. Do we negate this red bar, in which case then we're all out bullish for the rest of the year? Or do we base at the bottom of it, or do we even continue lower? Usually you don't continue through a rising 20 like this. Usually we get some kind of a reaction, but the reaction is going to be very, very telling. It's going to be very, very telling. If it's a weak reaction, you get a green bar, we might get a quick 1, 2, 3. Okay, so we'll see what kind of reaction, and based on that, we'll decide what direction the market should go in, and again, position ourselves to benefit from it. If it goes in the right direction. All right, and if you're in the strategic swing trader program, then you should benefit as well, because I'll pick the trades that will do well if the market continues lower. All right, guys, have a great weekend, everybody. Thanks for tuning in. Again, we do these videos just to keep in touch with our members, but also to show our gratitude for you being part of the family, part of the community, and we hope you find them beneficial and educational. Take care, everybody. Have a great weekend once again.